All right, it's time for our call of the day, and it is Verizon. The stock's down about 1.25%. Why? Because of a brewing price war between Verizon and AT&T. That is why MoffettNathanson downgraded Verizon today. So, Josh, you own it, and it really is all about AT&T. They say the call comes on the heels of last week's better-than-expected earnings report from AT&T. That performance should allow AT&T to continue with its promotion pricing stance, dinging its competitors. So you own Verizon. What do you do for others who might as well?
Yeah, I would just argue that this idea that all of a sudden it's more competitive, this is one of the most competitive businesses since day one. Like wireless, the amount of money they spend on advertising, the price cuts, the promotions, it's always going to be that way. So it's not a great reason to get out of Verizon. People complain all the time there's no cheap stocks. I missed it. The Fed is taking away all my returns. Well, here you go. 11 times earnings, 4.5% dividend yield. That's more than double what you're getting in a 10-year treasury. I think if you hold Verizon equity versus a treasury over the next 10 years, you'll definitely have more volatility, but I think you'll definitely have more return.
Wow.
And so I would not be a seller of Verizon if you own it for the right reason.
I got to own it for the next 10 years to make some money because this thing's been a dud by every metric. 1 month down 3%, 3 months down 2.5%, year to date down 4%, 6 months down 1.5%, 1 year down 2%, 9% below its 52-week high. I've got to wait 10 years?
Judge, it's a utility. It's not a growth stock. You own it for total return, which is the dividend plus any capital appreciation you get on the stock. It's one of the cheapest stocks in the S&P 500, and I would not be selling it because all of a sudden there's going to be promotional activity. There will always be. There always has been. Grow up, MoffettNathanson.
Stephanie Link
just
says,
kidding. Love you guys.
Stephanie Link says, talk to the hand on that because she just bought AT&T. Stephanie.
Yeah, and so, well, yeah, and back to selling Nextera at 31 times, AT&T is at 10 times. So to Josh's point, these are very, very cheap stocks. But this one yields 6.8%, and that's actually what caught my eye when I was doing homework on it after they reported. 6.8%, well-covered yield. I thought the CEO did an amazing job on CNBC last week in talking about the strategy. It was a clean beat. The first time they've had a clean beat in forever. They're very focused on subscriber growth. They beat on subscribers. HBO Max was 2 times the amount of expectations in terms of sub growth, so that's a good thing. And they've got ways to go in that part of the business. Mobility services margins were up 100 basis points. And ad revenue growth, they're starting to see that in Warner Media. So I think it's diversified. I think it's more diversified than Verizon. It's cheaper, has a better yield. And yeah, it's a utility. So are we going to make a ton on this thing? No, but I don't have a lot of these kinds of names in my portfolio, and I like to be diversified. But that yield is what really attracted me.
All right, let me ask you about one more because it's one that maybe you don't mind waiting 10 years for because you might have to. You know where I'm going with this one. What am I talking about? You know. I know you know. GE, maybe?
I know. GE.
All right.
Yeah,
All right.
GE. Look, I mean, the stock's up 20% year to date. It was a monster last year. Culp is doing the CEO. He's doing a great job turning the story around. And yeah, turnarounds take a really long time. This wasn't this quarter today wasn't the reason you own GE. You own it because aviation is troughing, and they did a very good job on margins in aviation. I think that's the highlight. And so when you do get top line to actually improve, as we see the long cycle stories and industrials do better, you're going to see a lot of operating leverage. And healthcare was a gem. It remains a gem. It was really the power business and renewables that were really disappointing. But I think, again, that, too, is on the trough side of things. But restructurings take a long time. You know that. I have a few of them in my portfolio. I remain committed.
I know I joke around with you on this, but if I was to say, is this a 3-year story? Is it a 5-year story? Is it a 10-year story? What is it?
No, it's not a 10-year story. I think the stock will be higher in a year from now. I think you're going to make money. I made a lot of money last year because I was buying it at $6, $7, $8 a share.
I know, but
so
like
I think
the
it's
last
a
year
slow
was,
recovery story.
A lot has happened in the last year, Steph.
I know. Well, I believe aviation is bottoming, so that's a good thing, I think. And I do think aviation, as we reopen, you're going to see an improvement in these kinds of companies. And again, operating leverage is underappreciated, and I think something that people will get very excited about once they start to really deliver on the top line.
All right, good stuff. I'm glad we hit
It's not going to be 10 years, though, Judge. I promise you that.
All right.